one of the things I do, once we set up a tour date and an appointment to see the property, I always recommend to my buyer, the client, to look at the bones of the property, as Jeff talked about. And what are the bones of the property? Everybody asks that question. Well, that would be your roof, your windows, your foundation, your HVAC, any of your mechanicals. And the reason for that is they are the most expensive when something happens to them, and are the most expensive to repair. So there's where you want to pay close attention to those particular components whenever you're walking through a property. And again, as Jeff mentioned, my experience as a contractor can pinpoint some of those things. But again, as I said before, I do not recommend foregoing a home inspection. That's in addition to everything else that you're going to do. And one other thing we touched base on an FHA loan too, we might as well say too that an FHA loan would require an additional inspection from the appraisal. And typically what they look for is versus, it's not a home inspection, but it would be a separate appraisal. And they look for things like peeling paint, smoke alarms, carbon monoxide testers, railings, those types of things. So again, that type of loan actually has one other step to it whenever you're applying for an FHA loan.
Right. And I'd say prior to 2010, everyone was afraid of either a VA appraisal or an FHA appraisal, saying, man, they're just so much more stringent and more difficult to get approved than just a conventional loan. I would tell you in recent days, all appraisals are tight, right? So all appraisals are going to look, they want to make sure that home is safe and that it's structurally sound and that it's good for the homeowner. The reason being, the bank is using that home as collateral, right? So these appraisals are going to be done, top notch. So the days of, an appraiser coming out and just skimming over things are over. So regardless of the type of loan that you're getting, they're always going to be looking to make sure that home is safe and sound. But again, they're not a home inspector, right? They're looking to meet the lender guidelines more than anything.
Right.
Yep.
Now, talking about appraisals, Jeff, there's this talk about the desktop appraisal. Can you talk any detail about that?
So when you say desktop appraisal?
In other words, some appraisal companies are doing what they call a desktop. They're doing it from their laptops. They're not even actually physically going out and touring the properties for appraisals.
I mean,
have you ran across that at all?
Those are far and few between. Like those, that would be, so there, and I wouldn't even air this piece of it. I won't put this on the show. But just so you guys know here, those are PIWs, appraisal inspection waivers, appraisal property inspection waivers. And if somebody's buying it because they've started recording this data from like 2010 to today. And so if it's in line with the value of what they think it is, based on the appraisals for the past 12 years, then they'll give you a PIW saying that the value's good, right? And that there haven't been any claims against the property. Okay. But those are far and few between. Like that would have to be, especially with the values going up as much as they have in the past few years, we're not seeing many of those. But those would be automated through Fannie or Freddie.
Gotcha.
Yeah.
Okay.
Yeah.
It's just some questions that I've got, that people are talking about and just.
When we get one, we still ask the customer, like, do you still want a full appraisal, which I would always get.
Absolutely.
Yeah.
Absolutely. Yep. And that's one of the things that in the contract that I always do is I always make sure that the buyer's protected, that the property appraises for the sale price.
Right. Yep.
Okay, so now we've covered the pre-approval, we've covered getting your realtor. So now you found a home, you've toured your home. What's next? You've loved the home and you want to put an offer in. So what's the steps now to put the offer in?
I mean, you already have your pre-approval letter. So
you already got your pre-approval letter. So what's the offer price? That would be number one. Number two, is there any seller's assist required? Seller's assist depends on the type of loan. That can range from 3 to 6%, depending on the type of loan. And seller's assist will help with closing costs, especially for a first-time home buyer. It will help with the closing costs at the time you go to close on the property. You would want to pick an acceptance date. Typically, I give 24 hours in the acceptance date after we write the contract. We would determine the amount of hand money, which is good faith money, and that's typically 10 to 15% of the sale price of the house. And that needs to come to the buyer's brokerage within 5 days, and they hold that money. The next thing we would do is we will pick the closing date. Typically, a closing date right now is running about 30 days, maybe a little bit longer if it's an FHA or government loan product, just a little bit longer. So again, hand money would be 1 to 2% of the sales price of the house. And then you need to determine what your down payment's going to be also.
Yep.
And your loan officer will help you determine what that will be whenever you put your offer in place.
The one thing I want to speak to is seller's assistance. So seller's assistance is just a way for you to finance your closing cost. And it could be from 2% to 9%. So on an investment property, like a non-owner occupied, one you're not going to live in, but you're going to make money on, you can do 2% seller's assist. On a 5% down or less than 10% down conventional, you can do 3% seller's assist.
Okay.
When you're going to put more than that down on a conventional loan, from 10% down to 25% down, you can do 6% seller's assist on a conventional, and more than 25% down, you can do 9% seller's assist.
Wow, that's
right?
awesome.
Yeah.
Awesome.
And on government loans like VA, USDA, FHA, you can do typically 6% seller's assist. And what that means is if you were buying a $200,000 property, $12,000 can be used, rolled into the loan for you to finance your closing costs, so you don't need to bring that money out of pocket in the term of cash or coming out of your checking account. You can just finance it into your loan.
Hey Jeff, does that affect the competitiveness of an offer or anything like that? Can you speak to about
Yeah.
how that does?
So we know when the market was getting really competitive, the offers that were winning first were cash, right? So if somebody can show up with cash, that was typically the favored offer. The next favored offer was typically 20% down conventional, and then came the govies, and then after that was govies with seller's assist. And I'm glad you asked that question, because back when they were getting that competitive, we started doing something called a guaranteed underwrite. And so we would underwrite it and say, listen, we'll pay $5,000 if this loan doesn't close on time, to help people win with their government loans that had seller's assistance on it. Because oftentimes people think, oh, they're getting an FHA loan, they're not that well qualified. That's not true, right? So we would underwrite it up front and say, look, we guarantee this thing's going to close on time. If it doesn't, then we'll end up paying for you for this loan. And we helped people get their offers accepted over other offers. One example I had was a veteran. He put his offer in, and he was going up against a cash offer. And the seller chose the veteran's offer with seller's assistance because we had that guarantee on it that they were going to close.
Very nice.
Yep.
Yep. And it's a good question, because even in today's market, we're still seeing multiple offers out there, but we are seeing more FHA loans and more seller's assist being accepted with the offers today, unlike before where, cash was king and, conventional loans were more prevalent. But like I said, we're still seeing, multiple offer situations out there today. And then getting back now to something else that's important in the sales agreement is to pick out your home inspections. Typical home inspections are home inspection, your pest, your radon, and that, like we talked about, your SOAR camera test. And all these will be on your sales agreement. So these are key components that you want to make sure are in your sales agreement. Once that happens, once that happens, we hope that your offer is accepted. If your offer is accepted, we'll move on to the next step. What I do is I supply my clients a list of all pertinent information and dates that are important tasks to complete on a timely manner to keep us within contract deadlines on the sales agreement. Some of those to include is the hand money check. As I said, within 5 days, our brokerage needs to have a check with 1% to 2% for the hand money. Good faith money. You will also get a questionnaire from the title company. Please fill that out on a timely manner. Get your inspections ordered on a timely basis. Plan on being there for your inspections. That's critical. Complete your credit application and make sure you order your appraisal. As I touch base, you have an appraisal. Sometimes an FHA may take a little bit longer because they're going to have their own person go out. And if there's any repairs or anything needed, you want to make sure you have time in order to do that. Because again, that is separate from what a home inspection includes.
Oftentimes I have people call me and say, hey Jeff, I'm going to do a for sale by owner. And man, when I hear that, I just cringe. Because having a real estate professional representing you, most people don't understand how many things are due. Right?
Oh,
they don't understand the dates they're due, the dye tests that are due, all the things all the things that are due behind the scenes. A buddy of mine a while back said, hey man, I'm going to do for sale by owner so I don't have to pay that real estate commission. I said, great. What are you going to sell the home for? He goes, I'm going to sell it for $140. I'm like, all right, the last appraisal came in at 160. Please go get a real estate agent, right?
Amen.
Because you're going to sell it for less than what it's actually worth. And there's a ton of stuff that has to be done throughout the loan process that most people don't even realize.
Well, here's a true story too. I was involved with a for sale by owner to one of my relatives, and the property that was for sale by owner, his attorney represented him through the transaction. He is a family attorney. He handled the estate of his parents and different things like that. So on this particular property, there was a home with land, and then there was a separate lot. So whenever you write up the sales agreement, you got to make sure you have both plots listed on the sales agreement to cover that property, and then if there's an additional lot. So as we went through the process and we got with the closing company, I was representing the buyer. The closing company says, hey, there's inheritance tax owed on that property. Now here's the caveat, Jeff. They've already accepted the offer. They've already accepted everything, so we're under contract.
Wow.
They can't back out now. So at the day of the closing, it was a $10,000 hit to the seller because that inheritance tax hadn't been paid.
Wow.
And now if they would have used a real estate professional, they would have found that out. But not that the attorney wasn't a professional, but he wasn't a real estate attorney.
Yeah.
And there was a difference.
There's a difference. I mean, you can be an attorney, you can be a phenomenal attorney, but working with somebody that does this every day, there's a big difference.
And the documents. The
Yeah.
documents are key. They don't have access to the documents we have. And our documents are from West Penn Multilist and PAR, which is Pennsylvania Association of Realtors. And that is one other thing that I am a member of, RAMP, right on West Liberty Avenue. So we're there, we're on the board, I have updated information, and that helps whenever it comes into the transactions.
Mm-hmm.